So the demand has gone up, the supply has gone up, which has in a way played a very, very big role in surging the personal loans. Typically, you have to start tracking your CIBIL score as soon as you avail your first loan or a credit card. New to credit is definitely considered slightly risky because the lenders do not have his past repayment track to see whether is the customer paying on time or no. However, now with a lot of digital initiatives and digital push, a lot of banks and lenders are not only looking at CIBIL, but they are looking at a lot of other factors also. Be very judicious whenever you're borrowing or taking a loan or taking a credit card. Take a card or a loan only if it is required. When you take a loan or credit card, just make sure that you do not overburden yourself.
Hi everyone and welcome back to Ask InCred. In this episode, we are going to talk about something that touches almost everyone at some stage of life, personal loans. Whether it's funding a big purchase, managing emergency or fulfilling dream, personal loans often act as a financial bridge that help people move forward. But there is more to the story. We will also dive into the world of credit score, first-time borrower and beyond. Helping us unpack these insights, we have with us Gautam Kotak,
National Sales Head for Personal Loans and Education Loans at InCred Finance.
He is a seasoned professional with over 2 decades of experience in financial services. He had worked with leading institutions like ICICI Bank, Axis Bank and Fullerton and has been with InCred for past 8 years. Hi Gautam, welcome to Ask InCred.
Hi Vaishali, thank you.
Okay, Gautam. So in this episode, we are going to talk about personal loan. It's very versatile product, right? And this product is designed to meet different needs, right? And it has become a go-to choice for many people out there. So let me start with a very interesting question to you. What has been driving the surge in personal loan and what makes them so attractive for customer today?
Right. Thank you, and a very valid question, Vaishali. So on the demand side, of course, the salaries and incomes have also gone up. It has not gone up to the extent of the expenses which have gone up, and therefore there is a lot of gap. So if your incomes have gone up by 5, 7, 8 times over the last 10, 15 years, your expenses have gone up by almost 25, 30 times. To bridge that gap, people are taking loans, right? So there is enough demand in the market. Now coming to the supply side, let me just again take you back a few years. Around a few years back, there were majorly nationalized banks and a few private banks which were disbursing personal loans. But now, if you look at it, you've got banks, we've got private banks, nationalized banks, we've got NBFCs, we've got fintechs. So again, from the supply side, today the supply is way too more what it was earlier. So the demand has gone up, the supply has gone up, which has in a way played a very, very big role in kind of surging the personal loans. And this is going to be this would continue now for a longer time.
Interesting. So, what are the most important questions one should ask before taking a personal loan?
So I'm assuming you're talking from a borrower point of view.
Yes, yes.
So while of course there are very generic stuff which a borrower should know about the bank or NBFC or any lending partner from which he's availing a loan. But a few critical ones which I think is worth highlighting are what is the rate of interest that he will be taking a loan at. The rate of interest, whether is it a fixed rate or a floating rate. Usually in a personal loans, the rates are fixed. For any smaller duration loans, the rates are usually fixed. For a longer duration loans, the rates are floating, which can keep changing as per the benchmark rates. So what is the rate of interest? Is it a fixed or a floating rate? Then what would be the processing fees? What will be the one-time charge which the borrower will have to pay? It can either be collected by the bank or can be deducted from the loan amount or added to the loan amount. But what would be those fees? Are there any add-ons like insurance or any other add-on products which is being attached to the loan? What would be the other charges? So if a borrower ends up not paying a EMI on time or defaulting or bouncing any of the EMIs, what would be the charges that he will have to bear? Is there any lock-in period, within which the loan cannot be closed? It has to compulsorily run for those many months. What would be the foreclosure charges if the borrower wants to foreclose the loan? By foreclosure means if he wants to early close the loan and not continue, then there are some charges attached to it. What would be those charges? And also, if he can just go through his repayment schedule to understand that every month what is going to be the principal outstanding, how his entire EMI is going to run down, how his principal will run down, so that he has an idea that if he has to close the loan in 6 months or in 8 months or in 10 months, what is the principal outstanding that he has to pay at that time. That is important. So these few things I think are very critical for a borrower to check before availing a loan.
Yeah, I think quite a lot of things, the
Yes.
borrower has to check
Yes.
before taking a
Yes.
personal loan here.
Yeah.
Now, could you just share a few tips to help people get their personal loan approval faster?
Right. Again, gone are the days when when a borrower had to go to the bank, fill
Right.
lengthy application forms, attach his photo, give his documents in physical, his residence proof, his income proof, give a updated bank statement. Now things have changed drastically.
Right.
Now we are in a far advanced digital era. What we need or what a borrower needs now from a loan point of view is he has to be digitally savvy. If he needs a loan quickly or fast, he has to ensure a few things. Um, he has to ensure that his Aadhaar card and PAN card are linked. He has to ensure that his mobile number is updated at his with his PAN card, with his Aadhaar card. He has to ensure that his banking, his mobile number, his Aadhaar is updated with his banking. Then there is a good chance that he'll be able to avail a loan in hours, if not
Okay.
minutes. So with a lot of digitization, a lot of banks now do not do very traditional underwriting method or traditional verifications. They will not ask your bank statements, but they have a option of doing a we call it as AA, which is account aggregator,
Okay.
where they just take a consent from you and check your banking. It's totally safe. It's very foolproof, and it is completely digital. Right? They check your EPFO if your salary has an EPFO deduction. So through EPFO they verify your income. The verification or the KYC checks are done through video. So there is a video KYC.
Okay.
You just need to have a hard copy of your PAN card and Aadhaar card handy with you when
Okay.
there is a video KYC. So if all these things are available, if all these things are in place, then you can get your loan very quickly. As I said, in hours, if not minutes.
Many people use credit card loans or roll over their dues
Right.
without realizing how expensive it can be.
Correct.
So, can you just explain what are the key difference between taking a personal loan versus taking a credit card loan?
Right. Okay. So in credit card loans also, as you rightly said, there are two kind of loans that individual can take. One is he spends and then he converts his transactions into EMI. That is one kind of a loan which people take on credit card. And second is a term loan on the credit card itself. So
Okay.
you have a credit card with a X limit, and banks will give you a loan up to whatever percentage of the limit that you have. It is expensive. It is compared to personal loans. It is more expensive, and also the tenors are typically shorter. So if in personal loans your typical tenors are 4 years and 5 years, here the tenors will be 2 years and 3 years. So therefore your cash flow is a little gets impacted accordingly, and also it is a part of your overall credit limit. So it restricts your credit limit to the
Right.
extent of the loan that you've taken. Right? So apart from that,
That means with personal loan, you get more credit, right? The higher loan amount, is that so?
Higher loan amount, yes, but it will not disturb your existing credit limits.
Okay.
So you take a personal loan and you still have your credit card limits on you. So if you want to
Right.
spend tomorrow or you end up spending on your credit card, you will have that additional limit available to you.
Okay, perfect. So now that we are talking about loans, and one word which will surely come up is
Right.
CIBIL score or
Right.
credit score.
Yes.
Can you just quickly take on what CIBIL score is and how it impact a customer loans approval
Right.
and interest rate they have
Right.
been offered?
Right. So, CIBIL plays the most or is the key factor in any loan eligibility. It is in a way a gating criteria for any bank or financial institutes. So they will first check the CIBIL of a borrower. If the CIBIL is good, only then they get into the other verification. So CIBIL therefore becomes the most important factor. Now, what constitutes a CIBIL score? Is I will not get into the technicalities of the score, but I'll just give you brief factors of what a lender would see in a CIBIL or what a borrower should ensure. Therefore, CIBIL score typically is a three-digit score, which is between 300 to 800, between 300 to 900. The higher, the better. So. And then of course there are new to credit also, which is 0 minus 1, which we'll talk about later maybe. What gets into the score or what are the factors? One is when you take a loan, you have to pay your loans on EMIs or credit card dues on time. Missing your EMIs or not paying on time will impact your score badly. Right? So that you need to be very, very careful about. Second is if you are borrowing, just borrow judiciously.
Okay.
Do not borrow just because you're getting a loan, or do not take a credit card if you don't need it and it's just being sold aggressively. Any credit card or credit limit that you've taken which you do not intend to utilize impacts your CIBIL score. It impacts your credibility because that credit limit is set against your loan, and it also impacts your eligibility to take a loan. When you take a loan or when you take credit cards, also ensure that after getting the card, you do not overutilize your cards or your limits. Use it to the extent that you need it. If you get a credit card with a 5 lakh limit, does not mean that you spend entire 5 lakh rupees. What lenders also see is that what is your credit limit that you've got and what is the utilization that you've done. Higher the utilization, lower would be the chances of you getting a loan, or your CIBIL score might get impacted accordingly. So if you have a 5 lakh credit card limit, does not mean that you keep spending that 5 lakh rupees. Do check your CIBIL score regularly. What happens and what we've seen in a lot of live examples that we get is a lot of customers come back to us and say that मैंने तो कोई loan लिया नहीं है, या I have not defaulted in any of the loans, but still you've rejected my loan. When we check the CIBIL, we realize that in a lot of loans, he is either a co-applicant or a guarantor, which he may not know that that loan has got defaulted. And in some extreme cases, it has been misrepresentation by the bank or NBFC also. Customer has closed his loan or credit card, but it has not got updated correctly. So the borrower, as a due diligence, should keep checking his CIBIL score, if not very frequently, at least once in 6 months to a year, just to see that is there any loans or defaults which he has not done but reflecting in his CIBIL, and try to correct it. And the last is do not inquire too much.
Okay.
That is also one of the key mistakes which customers do, and we keep telling them, if you do too many inquiries and then do not take a loan, maybe because you are not interested, maybe you did the inquiry just you wanted to know your eligibility and therefore you did the inquiry, but what a bank or a lender would think is that that the borrower is doing a lot of inquiries in the market but is not getting a loan.
Right.
And therefore they look at it as negatively. So do inquiry only when you are interested in taking a loan. try to inquire only in the particular institutes or banks from where you want to take a loan. Do not inquire at 10 different places, 15 different places just to check your eligibility. That will impact your score very badly.
Okay. So, CIBIL score is very critical.
Very critical.
Yeah. So, would you like to share any example like how it has started impacting our daily life also, other than
Yes.
financial
Right.
journey?
Yes, there was a recent news article. We may talk about it jokingly, but if you look at it, this will in future have an impact. So there was a recent news article somewhere in Maharashtra. A female who was about to get married checked the CIBIL of the would-be partner, and the CIBIL was bad. There were defaults in the loan, and she rejected the proposal.
Wow.
Right?
That's
So
seriously impacting
that's
people's
impacting
daily life. Oh
exactly.
my
We
God.
might laugh it out now,
Yeah.
but if you look at it, tomorrow when we have when we try to get our kids married, this I
Right.
think is one thing which I would also want to check. It's also because it shows the financial ability or the strain that your partner can have, and at the same time the nuances related to non-payment of loans, which could be collections calls, visits by collection people. So this is one example, but I'm sure that as we go forward, in fact, even forgot to mention, even a lot of banks and NBFCs now, and a lot of other organizations also, when they hire a resource, they check their CIBIL report.
Oh,
Right?
interesting.
We do it, almost all the banks do it. And if the CIBIL report is not good, if we see that there are defaults or there are regular late payments, we do not hire those resources, because it speaks a lot about his own personal finances, his own understanding about seriousness about CIBIL, about loans, about repayment of loans. So not only does it impact marriage, as we discussed, but it also has an impact on your employmentability.
Right. It's
So
impacting
it's impacting everything, and
everything.
it's
Right.
only going to go up now. As
Right.
we move forward, CIBIL would be checked, or your bureau would be checked in a lot of other things also.
As you said, the CIBIL is very critical and
Right,
it has to be
right.
maintained properly.
Yes.
So, at what stage should someone start tracking their CIBIL score?
So typically, you have to start tracking your CIBIL score as soon as you avail your first loan or a EMI or a credit card. But again, that does not mean that you keep inquiring to check your CIBIL score, because that, again, as I had mentioned earlier, will start impacting your CIBIL score. You can check your CIBIL score through various. You can go directly to the bureau website and check your score. The frequency could be 6 months, 1 year, depending on have you availed any loans, what are the kind of loans that you availed. If it's only one credit card or one loan, then you might check it in a year also. That's absolutely fine. But if you have got multiple loans and you have a lot of rotational credit, then you can check it once in 6 months also, just to ensure that whatever payments that you've done on time are being reported correctly in CIBIL. But the tracking has to happen right from the time you avail the loan
Okay.
or credit card, whatever.
Interesting. So, is someone eligible for personal loan without having submitting their salary slip or with a low credit score?
Um, yes and a no. As far as the salary slip is concerned, I'm assuming you're talking about a salary document.
Document, right?
Right. Again, as I'm saying that today, we are digitally very savvy now. Even if you do not have your salary slip, however, if your salary is getting credited in the bank, you have a EPFO deduction, you will still be eligible for a loan, because a lot of banks will not look for the document if they are able to see your salary in the banking, if they are able to see your EPFO presence, EPFO in the deductions. So till the time that is there, you will not need a salary slip, or it is okay if you do not have a salary slip. Coming to the second part, which is low CIBIL, again, it has got two aspects. Low CIBIL could be A, because you do not have adequate CIBIL history. you've taken a loan, maybe, one loan 6, 8 months, 12 months back, which got closed, and then you've not taken a loan after that. Or you've taken one credit card with a very low credit limit, and therefore you do not have adequate history. That could be one reason of a low CIBIL. In that case, the banks do take, judicious calls. They check the overall banking, they check other criteria, parameters, and then if need be, they can still do the loan. But if your CIBIL score is low because you've defaulted on your loans, if you've missed your EMIs, if you've done some settlements, then it is very unlikely for any bank or NBFC to give you a loan, a personal loan unsecured specifically. So low CIBIL score because of inadequate history may still get you a loan. The loan amount may be a little conservative. The rate of interest may be slightly higher. But if your score is low because of defaults, because of settlements, because of non-payment, then it is very difficult and unlikely for you to get a loan.
Okay. So as you said, like if someone misses their EMI or
Right.
become a defaulter on a
Right.
personal loan, right? How much time that person will take to come back on track or, just recovered and get their financial journey strong?
So if it is a one-off default or delayed payment, then it shouldn't matter that much. If he's missed his one EMI and he ends up paying after 5 or 7 or 10 or 15 days, it will still not impact his CIBIL that badly because he would have still paid during the 15 days of default. However, if this is regular, if this is in multiple loans, then it becomes very difficult. Then the problem here is not then one EMI. If he misses his EMI, if he misses multiple of his EMIs or credit card payments, then this becomes a cycle for him. And then for him to come back to regularize these payments and be regular will take some time.
In our previous conversation, you just mentioned about new to credit customers, right?
Right.
For someone who has no history about credit, right? How does lenders view them? Are they considered as a risk or an untapped opportunity?
Again, a good question. While new to credit is definitely considered slightly risky because the lenders do not have his past repayment track to see whether is the customer paying on time or no. However, now with a lot of digital initiatives and digital push, a lot of banks and lenders are not only looking at CIBIL, but they are looking at a lot of other factors also, right? So when we say a new to credit, the other factors which a bank would check is, for example, what is the age of the applicant? What is the overall work experience, or for how long has he worked? What is his income? They check the banking. How is his banking? Is he maintaining balances? What is his expenses pattern? Is his income very regular? If these things are satisfactory, if for example the age is low, if for example the salary is not too high, if for example he's just started working, then it logically makes sense that this could be a new to bank borrower, new to credit borrower. And therefore the banks may take a call and they may give a loan to such borrowers. And of late, RBI has also been very, very aggressive on pushing the banks and NBFCs to lend loans to these first time borrowers. So therefore, it will depend on a lot of other criterias. But there is an so both it is a risk, but again it is a very big opportunity also if it is being underwritten very correctly.
So before we wrap up, Gautam, would you like to leave some key takeaway for our listeners how to maintain their financial wellness or financial journey strong?
Okay, so let me then just list down 3 key takeaways which I think should help the listeners. One is just because, as I said, that supply is immense today. You have banks, NBFCs, fintechs offering you loans and credit cards does not mean that you borrow you borrow very aggressively. Be very judicious in whenever you're borrowing or taking a loan or taking a credit card. Take a card or a loan only if it is required. Don't take it for the sake of pressure or for the sake of aggression by the sales. When you take a loan or credit card, just make sure that you do not overburden yourself. Typically, banks will offer you EMIs or obligations up to 70, 75, in today's time, even 80% of your net income. Does not mean that you borrow, or obligate yourself up to 80% of your net income. Typically, do not try to cross 50, 55% of your net income as your obligations. Keep some money handy, keep some money liquid with you. Keep monitoring your CIBIL very, very, regularly. You may not know that, or you may feel that maybe this is my last loan and after this I may not need a loan, or therefore, it's okay if I do not check my CIBILs. But since I also manage education loans, we get a lot of cases in education loans where the student who's the main borrower, his CIBIL is good, but the co-applicant or the parents, their CIBILs are not good. And when we check with them, they said that, sorry, we did not realize that, you will have to apply for our student, or for my son, my CIBIL report would be checked. So you never know, that at what stage or when in future you will need your CIBIL. So just keep monitoring your CIBIL. Ensure that you pay very, very regularly. So one more important point is, when any borrower is applying for a loan, he has to provide correct information. Now, what we've seen in a lot of our examples is a borrower, if he, for example, if he's not getting a salary slip, although he's earning a salary, it's reflecting in his banking, but just because he doesn't get a salary slip, he makes a fabricated salary certificate. Or if he's staying on a rent and does not have a rent agreement or a registered rent agreement, he will make a forged rent agreement. Do not do that. If you do not have documents, it is okay. Today, as I had mentioned earlier, in the digital era, there is a lot of checks or verifications which happens digitally. So if the salary is coming to your bank, for example, and if your banking is verified, your salary in a way gets verified. You do not have to provide a forged document, because if you provide that, and if during the verification the banks get to know that the document is forged, then the loan gets rejected.
Okay.
Similarly, if you're staying in a house and you have, there are digital ways of verifying whether you're staying there or no, or through verifications. But if you provide a false, fabricated or a forged rent agreement, and if the rent agreement gets verified, then again there is a good chance that, because it's a forged document, your loan gets rejected. So when you are applying, provide correct information. Do not give any forged or fabricated documents just for the sake of availing a loan.
Thank you so
Yeah.
much, Gautam. It was quite an insightful chat. Thank you for coming here, taking our time. Thank you once again.
Thank you. Pleasure is mine, Vaishali. Thanks a lot.
Thank you.